Welcome to this week's market drama. We'll begin with the S&P 500 and Nasdaq, which were down 2.5% for the week. S&P is now down 1.3% year to date. Nasdaq's down even more than 3% year to date. So what happened last week that drove the market lower? Well, it actually started off pretty quiet on Monday, but the real action really started on Wednesday when there was a weaker than expected 20-year Treasury bond auction, which pushed longer term yields higher. In fact, the 30-year yield went higher than 5%, its highest level since 2023. And that week auction um, basically was in the back of the fact that Moody's downgraded the US sovereign debt the prior week. And by Friday of this past week, it was kind of amplified when the House of Representatives passed President Donald Trump's tax bill, which some believe could increase federal debt considerably over the next several years, right? So the Moody's downgrades about concerns of U.S. federal debt and fiscal deficits, and then we passed this bill that kind of accelerated the concern, right, both from the bond market as well as the stock market. And then on Friday, equities continue to slide when President Trump announced plans to impose a 50% tariff on imports from the European Union that would start effectively on June 1st. Now, this is when trade talks are happening with the European Union, and no doubt has to do with kind of his negotiation tactics to get something done. Nonetheless, he also included a threat of 25% tariffs on iPhones unless the Apple production line gets moved to the US. That sent Apple shares down 3% on Friday, right? So all of these kind of call it geopolitical headlines is what drove the action last week. Now, it's important to note that yes, the Moody's downgrade was a major reason for yields to go up higher, but we actually had seen the 30-year yield on Japanese bonds go up to the highest yield on record. And also bonds in Germany, the UK, Australia were all under pressure last week. So it didn't have to be just with the fact that we got the downgrade is, other yield, if other yields around the world for bonds are going up, that does put upward pressure for Treasury yields as well here in the United States. So that was what happened last week. Next week, we have earnings for NVIDIA, which is highly anticipated in the sense of how big of a composition NVIDIA is now for the S&P 500, but also how volatile the stock is and has been around earnings. So stay tuned for that. We also have PCE inflation data coming up next week, which give us another look of how inflation's faring with all of these concerns around tariffs and what they would do to the inflation picture here in the United States. That is it for this week. Stay tuned for next week.